very good morning to our RANsquawk listeners and welcome to the European Rundown for today, Friday the 29th of July. One of the major stories to come out so far this morning, which has captured most of the attention, has been Moody's. Pre-market today they came out and said that the Spanish AA2 sovereign rating they put on review for a potential downgrade. They cited some of the funding concerns given the ever-increasing yields in which we've seen in the Spanish curve, and they said that any potential downgrade would likely be one notch in size. As such then, some slightly risk-averse trades seen at the open. The banks generally seen around 2 to 3% lower in terms of Spain and the rest of their peers within the banking sector in Europe. Continued jitters as well, somewhat stemming from Greek press. The Katharini news agency reported that Italy could well be contemplating not giving the next loan to Greece in terms of their second bailout, which was agreed only around a week ago in Brussels. This comes as one of the clauses states that if their own 10-year yield is above that in which the rate they're giving these loans to Greece themselves, then they could well opt to not take part, which would mean that other countries such as Germany and France would have to pick up the slack and compensate for those costs. So definitely worth keeping an eye on the Italian spreads, which are again seen a little wider this morning over bonds and particularly those bank stocks. But at the moment they're pretty much seen in line with the rest in Intesa and UniCredit's case. One thing which we have seen though on that situation, which has reassured somewhat the markets, however it's been pretty short-lived in the actual market movement, has been Greek finance ministers quoted in sources as saying that China could well be a noted buyer of Greek debt going forward, which could well be supportive for them in the near future. Looking elsewhere, much of the main focus here, especially as we head toward the weekend, will be on the debt negotiation for the ceiling. That's the debt ceiling in the US. That August deadline, the 2nd, will be next Tuesday, so they are continuing to run out of time now, and with still no compromise, the threat of a potential downgrade to the US's AAA rating has now become a real reality for the market. No doubt then, as we head towards the rest of the session, we will continue to hear various rumours, so saying which will keep you updated on live on the Squawk Box. But elsewhere, in terms of economic data, do be aware there is the first look at second quarter growth in the US. That, coupled with any inaction on the US debt ceiling, could well put some pressure on US denominated products today. That pretty much concludes the opening wrap from me for this morning. We'll have another update this afternoon, so I wish you all a great trading day.